Good afternoon, traders and investors. Will back here with another one. Happy Friday to everybody. Hope you guys had a beautiful week. It was a nice green week in the market here and culminating in another green day. So very, very beautiful rally by the bulls this week. Are we due for some potential pullback now at this point? We will have a look at that in today's video. And today's gains were pretty much due to non-farm payroll numbers coming down a little bit. So jobs slowing down a little bit, guys, which is good for the Federal Reserve in terms of the narrative of wanting them to bring down interest rates sooner than expected. So we'll go over the non-farm payrolls numbers very, very briefly. We will also cover 3 company earnings today. We have a good one for you guys. We're going to compare e.l.f. Beauty and Estee Lauder, the new kid on the block and the old legacy company. We're then going to compare also Fortinet earnings, which is one of our cybersecurity plays that I'm very fond of. And lastly, we're going to get into Shopify here. And then we're going to cover our technical analysis for our major indexes here. Going to do a monthly recap here on the monthly candle closes across all our indexes, and then our major tech names as usual. And finally, conclude it with a little portfolio update because I haven't done one pretty much since Monday here, but very, very good week in the portfolio as well. So without further ado, guys, let's get right into it. SPY up 0.91%, QQQ up 1.17%, green across the board once again. You will see here on the heat map, very beautiful market except for a few names in healthcare. Eli Lilly pulling back after beautiful earnings yesterday, and Apple as well pulling back after their earnings, but gaining nicely comparison to their drop in after hours after earnings yesterday. So very, very nice broad day in the market as well. You'll see here on the one day relative, everything pretty much in the green except for energy, which is good in the aspect of bringing inflation down. And then the 1 week relative performance, you will see, guys, look at these percentages. Let me zoom in and move my big head here. Everything up substantially. So very nice recovery. It's been a very long time that I've seen such a bullish week in the market in terms of recovery, but we were predicting this, guys. I will remind you that last week we were predicting with a few factors coming into the support level why the markets were oversold. We had net new 52-week lows, the highest percentage of 52-week lows that we had seen pretty much in the last 7-8 months. We also had some other factors here in culmination, right, in terms of oversold conditions on our technical aspects. And we did have the lowest percentage of stocks below their 50 and 200-day moving averages in the past year, guys, since last October. So all of that together gave us some beautiful oversold conditions, and I hope you were able to buy the dip like I was able to as well here. So very beautiful week here, and without further ado, let's get right into the non-farm payrolls here. So what happened today, guys? News in the morning. U.S. payrolls increased by 150,000 in October, less than expected here. The forecast was for 170,000. It was a sharp decline from the gain of almost 300,000 in September here. The unemployment rate rose to 3.9%, guys, the highest level since January 2022, amid a drop in household employment. Now, this is bad for the economy, but good for the narrative of the Fed bringing down interest rates sooner than expected. You want to see job creation kind of slow down here. So the Fed is kind of has its hands tied behind its backs, right? When it wants to stimulate the economy into growth and to stimulate job creation, it has to bring interest rates down. So the market reacted very beautifully from this. And you can see it is on a downtrend here, pretty much all the way since last year through this year. The jobs creation is getting slower and slower and slower. Still healthy, we are creating jobs, but the unemployment rate is slowly ticking up, guys, ever so slightly ticking up here. And you guys know that the Fed's mandate is number 1, to combat inflation, which they've been doing very, very aggressively here with interest rates. So they've been doing a good job. Inflation's coming down. The number 2 mandate of the Fed is to kind of mandate full employment here. So they want the economy to be at full employment. And so it's very possible that when the Fed sees inflation coming down, but job creation also coming down here, they may just have to lower interest rates and stop hiking them. And instead of going higher for longer, we may be in for a few rate cuts next year, even though Jerome Powell said on Wednesday that he wasn't thinking about it. This is why the market is calling the bluff, because all the economic data points to the fact that they could drop interest rates if they wanted to, because the data is pointing in that direction, guys. So great day by the bulls here. Now, without further ado, let's get into some earnings, shall we? So we're going to do a nice little comparison here between two companies. One that I previously had early in the year, took a trade on the channel here. Estee Lauder had a trade here going on for 170 and cut it after rolling some covered calls down in the 140 range because I was not liking the fundamentals that I was seeing of the company here. Company Estee Lauder trading down from its all-time high 70%, guys. Look at this massive sell-off in this legacy company here. A lot of metrics are oversold, the weekly as well, but this company may not be a buy yet, guys. And we're also going to compare Elf Beauty, which just had earnings as well. So these two companies just had earnings. So let's get into them right away, starting with Estee Lauder here. So Estee Lauder here coming in with a beat here in terms of EPS. They were supposed to have a negative earnings per share, which is very bad for the company, but they did post a positive EPS here and declining revenue. And that was the key metric here, is declining revenue, guys. Look at this PE ratio. When your earnings come down, it doesn't matter that your stock price is coming down. When your earnings come down, the stock is not cheap. This is the same thing that happened with Disney, right? Somebody asked me whether or not I like Disney on the channel the other day, and this was my exact same response. It doesn't matter so much if the stock price is coming down. Don't get caught in the trap of thinking a stock is cheap because its price is down. All that matters is earnings per share. A stock's price is reflective of a company's future earnings. And if earnings have been coming down recently and future guidance is not there, you can see Disney's price to earnings ratio is almost 68, right? It's not cheap per se. That's almost 3 times the S&P 500. And Estee Lauder, even though they're down 71%, their earnings per share has been crushed. PE ratio all the way up to 75. Look at this drop in earnings, guys. Look at this drop in earnings. You'll see here on terms of a revenue basis, we're basically flat. We're basically flat for the past 4 or 5 years at this point. And look on the quarterly basis this year, guys. Declining revenue and declining profit margins. This is not the direction you want to see the company going in, which is why I have not bought it, even though it is cheap. So I pretty much sold my position and I'm staying on the sidelines for now. So let's get into exactly what happened here, guys. So Estee Lauder pretty much plunges towards a 6-year low after profit outlooks falls well below forecasts. Very bad, guys. This has been happening for a few quarters in a row now, and they've been blaming it on China and poor cost control. While we had a better than expected first quarter, we're lowering our fiscal 2024 outlook given incremental external headwinds, namely from slower growth in overall prestige beauty in Asia travel, retail, and in mainland China. Right? And they also said the risks of business disruption in Israel and other parts of the Middle East. Guys, this is such a small portion of their business. I'm not sure why they actually brought it up in the call, but it did not help. Obviously, that we feel for the geopolitical events, but it does not concern this business as much as it should here. The guidance was terrible, guys. And on the call, they did not give a good turnaround story as to how they were going to address it. They kind of just focused on external factors without focusing what they wanted to do internally here. So you'll see, guys, reported net income for the fourth quarter here, September 30th, that fell to 31 million or 9 cents a share compared to 489 million in the same period a year ago. Look at this crush in earnings from $1.35 last year to 9 cents. Absolutely terrible. Sales fell 10.5% to 3.52 billion, below the consensus. Skincare sales sank 22% to 1.64 billion. Very bad here. Makeup sales only grew 1%, guys. Not what you want to see. Fragrance sales did rise 5%, but still, hair care sales fell 6% here, below the estimates. And really disappointing guidance here, guys. Sales are expected to fall between 11 and 9%. Right, 11 and 9%. So they're guiding down for 2024. For fiscal year 2024, the adjusted EPS outlook was cut to between $2.17 and $2.42 from between $3.50 and $3.75. That is a net cut, guys. That's like a 40% cut in earnings per share. Very negative by Estee Lauder here. So I did not like this report at all, and I'm staying away from the company for now as they are just not consistent anymore, guys. Just not consistent with their free cash flow, not consistent with earnings, and not providing good guidance as to how they're going to mitigate these issues that they've been having. Very large brick and mortar business here, and they have not been focusing as much as they should on online ventures, which is completely the opposite of this guy right here, Elf Beauty, guys. If you guys don't know this stock, this is a stock that's very popular and trendy with the younger demographic, people between the ages of anywhere from 15 to 40 years old. They have absolutely blown up on social media, have very good marketing campaigns tailored towards younger people, and they've been capitalizing on that. And as opposed to Estee Lauder, their physical presence is not that large. They do have small outlets here in stores such as Walmart. However, they don't have their own branded brick and mortar stores. Like Estee Lauder has its own boutiques. e.l.f. does not. They are in other stores, but most of their presence is online, which allows them to keep costs down. And as opposed to Estee Lauder, look at this revenue and profit curve. This is the direction you want to see a company go, right? Absolutely exploding here on revenues, very, very decent margins as well, and bringing a lot of it to the bottom line. And the share price has benefited tremendously as well. And look at this earnings, guys. So I've been looking to purchase this stock for a while, but it was been on such a tear that I was waiting for a pullback. This is very much the pullback that I was looking for. So we'll be looking to add e.l.f. Beauty here in the lower $90 range. Wait till you see these earnings. EPS is up 56% and revenue is up 10% pretty much on the quarter. Very, very good. And now let's take a look, guys, at what they guided for as well. Blows past Wall Street's estimate, raises full year guidance again. Completely opposite of Estee Lauder. Estee Lauder is dropping guidance. These guys, not only did they beat and beat well, they're actually raising their full year guidance for the second quarter in a row after beating the estimates. Cosmetics company known for its viral TikTok marketing and middle of the road pricing saw sales jump 76% compared to the prior year. Estee Lauder is a premium product more towards the higher end consumer. e.l.f. here is trying to target everybody, and their prices are very, very attractive, guys. If you have a significant other, whether it's a boyfriend, girlfriend, wife, husband, whichever, and they know, ask them about if they know e.l.f. Beauty, right? And a lot of people do because they've been taking the internet by storm in the past 2 years. e.l.f. is expecting sales to grow between 55 and 57% for the full year. This company is in full expansion of its growth phase here right now, right? So they did very, very good, posting 76% year-over-year sales jump. Absolutely massive here, guys, right? And they did have a very good pop off of earnings, but selling back into a little bit of volatility here. But that's okay. I still like the company at this price. Very, very decent performance by e.l.f. here, right? So now it's increasing its sales estimates here between 55%. Very, very, very healthy, right? That's ahead of analysts' expectations of 47%. Very, very, very good quarter by e.l.f., right? And the CEO here, right here, he said exactly this as well, right? So they increased their marketing spend to increase sales. Our value equation, the ability to make prestige quality at these extraordinary prices, our holy grail innovation, taking inspiration from both prestige and our community, and having products consumers can't seem to get enough of. Very, very good value here by e.l.f. in terms of their beauty segments here. Consumers absolutely love them here. Digital sales were up 75% during the quarter. International sales came in 157% higher year over year. They are taking market share from your legacy beauty companies. So watch out, guys. This is why I like this company. They are disruptive. They're growing fast. They have low operating costs. They have very, very decent margins for the industry that they're in, guys. And their guidance is very, very good here. Now, let's take a look at both of these companies' comparison, right? So one is going up, one is going down in terms of guidance, in terms of revenue, in terms of EPS here. And I just want to show you guys, right? Look at the difference between the two websites. So this is Estee Lauder's website, okay? So very, very conservative, right? Free full-size revitalizing Supreme Plus, right? Holiday Heroes, yes. Advanced Night Repair Serum, Advanced Night Repair Eye Cream Skincare Set, right? $96, $100, $80, all that stuff, you know what I mean? And now, let's take a look at e.l.f. Beauty's website and how they're different, right? Look at these terms. Look at the type of consumer they're attracting. New Glow Reviver Lip Oil. Glow, what fun, right? So here we go, right? Stuff their stockings with 5 addictive oils for the same price as one of those bougie lippies, right? Comparing to Estee Lauder here. Look at the names of their brands, right? So we have the Love Triangle Lip Filler Liner here. Lip Plumping Gloss, right? So we have everything here. Slay the holiday, right? Very, very good. Give the gift of glam for an elfing amazing price. So you see the terminology here? They're very trendy, very targeted towards youth here. And you'll see they have sections $20 and under, $35 and under, everything, right? So very, very, very good marketing here by e.l.f. Beauty here, right? Splurge-worthy gift sets. You will not see this wording here, this more trendy, this more youthful wording here on Estee Lauder's website, right? Elfing amazing, hashtag elfing amazing. Take a look at their social media presence, guys. Look at e.l.f. Cosmetics on TikTok, 1.2 million followers, and they retweet a bunch of people. They have their shop listed right here. They also have their app, right, plugged in right here, guys. We're in our lips first era at the moment, 100% vegan, cruelty-free, right? Now look at Estee Lauder. Discover all things beauty from Estee Lauder. Only 163,000 followers, no website, nothing. So they need a new manager for their TikTok. Take a look at Elf Beauty here. And Elf Beauty is a relatively young company. Look at their social media following on Instagram here. 6.6 million followers here on Instagram. Once again, with the plug here, right? Plug of their website. And now take a look at Estee Lauder. At least Estee Lauder has the plug in their Instagram, but less followers. And Estee Lauder is a legacy company, guys. They've been doing this for a lot longer. They should have more social media presence. So Elf absolutely crushing them in every single aspect, guys. They're going to eat their lunch. So watch out. Elf, one of my favorite new companies to be focusing on. And in this price range, fairly decent value in my opinion. And now lastly, we're going to get into Shopify, guys. So Shopify here coming in very, very hot after earnings, guys, right? Up pretty much over 25% in the last 2 days since their earnings. Let's have a look. EPS up over 65% and revenue up over 2.5%. Shopify, let me just put this out there, guys. They have dropped considerably from the all-time highs. Why? Because they're inconsistent in terms of net income. This has always been my problem with Shopify as well. Yes, they're a growth company, but eventually you do want the growth companies to bring some of that money to the bottom lines for net income. That is what matters, guys. It's all about net EPS and net income. So these past few quarters have been good, guys. But once again, you can see the quarter back here in May, they almost went one profitable again. So they have 1 year, 2019 unprofitable, 2020 profitable, 2021 profitable, 2022 big red here in terms of net EPS, net income here, right? And you can see their quarters are just all over the place in terms of net income. So what I wanted to see is consistent profit from Shopify, and that is what they delivered this quarter. So I do like this stock here in the current price range, $60 all the way down to $50. Could be worth a nibble, but a bit too soon in my opinion, guys. They did get rid of a few lines of business, which I like, but still, just not consistent enough, especially in a high interest rate environment. That's the main factor that I want you guys to take away here. Shopify shares surged 22% on earnings beat rosy guidance. Yes, they did. They gave upbeat guidance for the remainder of the year. And here's the kickers, guys. I'll bring you into it right away here, right? So gross merchandise volume rose 22% to $56 billion during the quarter, right? So they make $56 billion, but they only bring back like $718 million of those dollars to the bottom line. Way too much cost of goods sold here for this company. There is no reason that they should bringing in this much revenue, being a software company, and only having net income of $718 million. They need to control costs, and at least they have been doing that more and more. So we'll get into that in a little bit here. So our results showcase the durability of our business model as we delivered a compelling combination of both top line growth and profitability, with revenue growing 25% year over year and free cash flow margin reaching 16%. So they're becoming profitable here, guys. It's very, very decent that they've been doing a lot of cost control here, right? So what they did, guys, is they cut a few lines of business. This is the line of business that that was causing them the most issues. The earnings beat came after Shopify, which makes tools to sell products online. They're an e-commerce brand, allow you to build a website and sell your own products, has sharpened its focus on costs. The company in May laid off 20% of its workforce and divested its logistics units to supply chain software startup Flexport, right? The sale included Deliver, the last mile delivery company Shopify acquired for $2.1 billion last May. So this is the fulfillment business. They wanted to provide a full solution. Not only did they want to give you an e-commerce platform to build your website, but they wanted to also offer fulfillment of products like Amazon did, right? But they realized that it's very tough. You obviously know Amazon's business of fulfillment is a very low profit margin business. They make a ton of money, but they can't bring a lot of it to the bottom line because they're competing on that last mile race, right? It's the race to zero in terms of delivery times here. Shopify realizing that it's not the line of business that they want to pursue. So they've divested from it, doing good cost control. And now finally, we have a quarter coming in here where they're able to bring $718 million to the bottom line compared to a loss of $158 million in the year ago quarter here. So now they're finally getting their heads on track to being consistently profitable. That's one quarter. I need to see a few more, but definitely worth a look here in the lower levels. I'm not opposed to buying this company. I do like Shopify. They are one of the industry leaders in terms of what they do. I just wouldn't throw the entire bag at it. It's not one of my favorite companies. It's definitely a great tech company, and being a Canadian company, I kind of do have a little penchant for them. So we're going to give them a little time to grow here. If the company does retrace here back in the lower 50 range, I may just pick up 100 shares, guys. But like I said, I'm not going to throw the entire wallet at it per se, right? So that's just the way it is for Shopify, in my opinion, guys. I do like the company. The only problem that I'm having is the inconsistency in net margins in the last few years. So let's see if they can turn it around, guys. At least they're trying to do cost control now. So it may be time to actually give the company a chance. That is exactly what I was looking for. And lastly, we're going to cover Fortinet, guys. So Fortinet, one of my favorite tech stocks, guys. This stock is going to be featured in my top 10 growth stocks. You can see here, I have the metrics on the screen right now, and we are in my sweet spot of support. This company has been no stranger to growth, growing very, very well over the past 5 years, and now they're in a decent area of support. They reported earnings and tumbled 20% after the earnings. Look at this massive crush off of earnings here. Bit of an overreaction here. They had the same thing happen to them last quarter as they did guide down a bit on growth here, but their earnings were fairly decent, guys. I'm not going to lie. They were actually very decent. The earnings came in, beat on EPS, but a very slight miss on revenue here. And you can see, guys, that this is one of our few profitable cybersecurity companies for now. So look at these annual earnings. Very, very nice annual earnings growth here, and they are net profitable, having profit margins of 20% and nice quarter-over-quarter growth as well here. So very, very solid company in terms of financials, right? If you look at other comparisons, such as Zscaler, which is one of their competitors, right? Also, a cybersecurity company, you will see here that they are pretty much down. They don't have positive net income at all, right? They've been struggling to bring money to the bottom line every single quarter and every single one of the past years. If you look at CrowdStrike, another stock in their industry, right? Same concept, right? Yes, they have positive EPS for the last little bit here, but in terms of net income, no positive net income in the last 5 years here, and on a quarterly basis as well. They're just barely becoming profitable. So Fortinet is my favorite play in the cybersecurity industry, down at our support level, down at our 200 weekly moving average. I like the stock in this position right here a lot for a pickup here. Between $50 and $40 is my sweet spot, and beautiful earnings by Fortinet, if I do say so myself, guys. Let's take a look at some of the metrics here, right? Fortinet's revenue and operating margin beat expectations, but products and billings growth was lower than expected due to slowing demand in secure networking market and some sales execution issues, guys. So you guys know that in an area of recession, companies tend to spend less on software. This is a business-to-business solution, guys. So when other companies such as Amazon or Apple are looking for cybersecurity endeavors for their own companies, they'll reach out to companies like Fortinet. Unfortunately, when you come into an interest rate environment that's quite high and companies are trying to reduce costs, well, a lot of these software companies, these software companies that they use, well, unfortunately, they stop using them, which is why billings have been down for them for a little bit here. But it's good. Fortinet is shifting focus and investments towards faster growing markets here, towards their secure access service edge and security operations here, which is 10, 20, and 10% of the business. Very, very good. Secure networking, their cybersecurity, still accounts for 70% of the business, but is expected to see lower growth after very robust growth in the past 2 years. Fortinet sees it returning to double-digit growth in the long term here. So very, very good here, guys. Expect them to return to double-digit growth by the second half of 2024. Healthy operating margins of 25% in 2024 and 2025. Very, very, very good, guys. Absolutely good financials by the company, guys. And it wasn't that bad of an earnings, to be honest with you. They missed revenue by 1.5%, missed the guide by 1%, missed billings estimate by 6.3%. That's a bit high, but they beat earnings before interest and taxes by almost 10%, and they beat the guide by 10.5%, guys. Beat by EPS and beat the same guide, right? So Q4 is going to be a slight miss in terms of the guide down here for the next Q4, but they do say that they're going to bring in good earnings per share and good net income. That is what matters in terms of profitability here. So you can see quarter over quarter growth, 3.1% from last quarter, year over year, still double digit growth, and a 3-year compound annual growth rate here, still in the high 20%, guys, for revenues and billings. That's exactly what you want to see. And you can see the margins here, guys. Very, very healthy margins. Look at these increases in margins since 2020, 2022, 2023. They're going in the right direction, right? So in terms of GAAP net margins, you have an increase here all the way to almost 23%. In terms of EBITDA margins, you have very steady here, 27%. Net income is remaining the same here and then slightly growing to 24%. So they're increasing net income. And you can see free cash flow, one of the most important overlooked metrics in the entire stock market, is going in the right direction here, guys. 2.2 billion in cash equivalents, 1 billion debt. They're very healthy setup for the future, guys. So I do really like Fortinet. It is my favorite cybersecurity play and definitely a pickup option for me in this range right here. So that's pretty much it that I had for you guys today in terms of earnings. Sorry that it took a bit longer, but I really wanted to get those out of the way, and it's a Friday video. So hopefully you guys can watch a little bit over the weekend here. Now let's get into our technical analysis for our major indexes, guys. So bounce continues, still looking for the daily higher low. Whenever this move tops out, and we're getting there, guys, we're getting there. Resistance is very, very, very close. We actually hit a little bit of it today. And if you look on the lower time frames here, guys, on most of our indexes, starting to get a little bit overbought here on the 4-hour. Can it stay overbought for a while? Sure, it stayed overbought right here and then continued moving higher. It stayed overbought, right? Started getting overbought right here and then moved a little bit higher. But when it starts getting overbought like this, guys, Coupling it right over here, we were kind of like in pretty much no man's land, right? But with previous resistance right here to the left on the chart, guys, it may be an area where the bulls are going to start taking a little bit of profits on the short term. So I would not be surprised if we get our little pullback very, very shortly here, looking to set the daily higher low. Bulls are very, very healthy. Look at this engulfing move, guys. Nasty, right? Off of this second leg down, very, very solid engulfing move. Just looking for the daily higher low for the daily trend change. Step number 1 is complete. Now I need to see step number 2, daily trend change for the bulls. If I had to put my money on it, take a look at these moving averages and this confluence down here, right? You have your previous resistance, which is support down here, and now you have your moving averages. So if we do pull back here, expect the bulls to pull back in this area, set a nice little bull flag, and then make a second attempt potentially at cracking this resistance area here. So be it. If next week starts off bullish and they crack it, then they can come sit down and they'll be able to sit down on this little area right here if they smash through that like that, right? But still no daily uptrend, guys. Daily move higher, but need to set the daily uptrend, right? This sequence of higher highs and higher lows, and really set that in motion here. Very beautiful move by the bulls here. Approaching some resistance on QQQ as well. You can see approaching our area of horizontal resistance like this, and also approaching our downtrending channel to the upside here, guys. So very, very good move by the bulls. Once again, 4 hour is slightly overbought at this point, so bulls potentially looking to take some profits in this area of confluence with overbought conditions on the lower time frames. Very bullish move up, guys, engulfing this most recent leg down. Any move down at this point will be looking for the higher low for trend change. Look, move up, higher low, trend change. Now I need to see the trend change, and potentially with it coming up this high in one leg, guys, maybe you'll get a trend change and smash through this channel. That would be the best case scenario. If we do pull down, guys, look towards this area of confluence, 360, or moving averages are down here. And then we do have this previous area of previous resistance here. And now we're going to be support where our last leg down started from, guys. So keep an eye out on that for QQQ. But very, very solid performance, guys, by the indexes this week. Absolutely beautiful recovery. Bulls creating a ton of space to the upside here. And even on the weeklies, I forgot. Today's the weekly and monthly recap, right? So let's go over the weeklies here. Weekly engulfing move by the bulls on SPY. That's exactly what you want to see. Monthly higher lows, in my opinion, guys, are set at this point, right? So very, very beautiful chart. Going to be looking for the monthly higher highs into the end of the year and early next year here. So bullish. Very, very bullish, bouncing off of our sweet spot here, off of the moving averages on the monthly, and you can see weekly engulfing move. Would not surprise me if the bulls do take profit, from this and set the weekly trend change after pretty much a weekly downtrend. Finally, an engulfing move, looking for that weekly trend change. And QQQ, same thing, weekly engulfing move after pretty much 3 solid legs down here. You finally get an engulfing move by the bulls, recapturing almost 100% of the last move. Would not be surprised if they set up for the weekly trend change here. And on the monthly, you guys know that we're going for the exact same thing, right? Monthly bull flag on QQQ. Look at this space created by the bulls. Monthly bull flag, looking for the monthly higher low. And then boom, to the upside, reacting beautifully from your 12 EMA here on the monthly. So bulls in full control at this point of the monthly here, and now regaining control of the lower time frames here. So pretty sure, guys, at this point, your monthly higher lows are set. Now looking at XLF, beautiful move. Look at this, guys. Legs down, boom, engulfing move, engulfing the last 2 legs in 1 week of trading. Love to see it, guys. This is elevator up move. Love to see it by the bulls here. Now struggling a little bit at resistance. That's normal, guys. Any little pullback here is going to be looking for a higher low for your daily trend change. Very healthy move. Bulls in control now of the daily. Just need to set step 2, set the daily uptrend here and start regaining a bit more of this weekly trend. Weekly 1, 2, 3 legs down, engulfing move by the bulls. Look at this beautiful, beautiful, beautiful move off of our lows right here, right? So we're going to be looking for weekly continuation, but if we do pull back, going to be looking for the weekly higher low to reverse this weekly downtrend here into a weekly uptrend. And on the monthly, very, very healthy consolidation by XLF here, tightening up. Look at this beautiful tightening range between these two higher area of resistance and this lower area of support here. Tightening up, guys, coiling up. I would not be surprised if we get our next pop to the upside here. And the next rise to the upside, guys, coupled with economic data and the Fed pausing and whatnot, considering its financials, would not be surprised if this is going to be the one popping into early next year and challenging this area of resistance, potentially breaking through for a bull market in XLF here that we have not had for the better part of the last year and a half. So that's pretty much it for XLF. Very, very good bullish control here, guys. XLV struggling a little bit, guys, but coming back very, very decently here, right? So on the Fibonacci, you'll see that on the daily trend, we do have a pushback here of 61.8%, doing exactly what I wanted it to do here. So they are trying to set up for the daily trend change right here. Going to be looking for this daily higher low now that they've taken back 62% of this most recent bearish leg down. That's exactly the size of the move that I wanted, setting themselves up nicely to use our support area right here as a little bounce zone and potentially bounce right up, set the daily trend change here. On the weekly, not as convincing as XLF, SPY, or QQQ, but look, 3 legs down and now engulfing move on the weekly to the upside as well. If we can get some nice bullish continuation into next week, they'll be taking back a lot of this move and really setting up pretty much a nice area of demand here. Whenever you see bullish, bearish week down and then the bulls recapture the very next week, you know that this is a heavy area of demand. This is exactly the area that we've been targeting on the chart. Nice to see bulls react nicely from that. And even on the monthly, the bulls are just looking for this to tighten up and then push to the upside here, targeting upside of 136 for healthcare. So healthcare still with a bit of work to do, one of our weaker sectors still, but I do like the size of this bounce, setting themselves up nicely for the daily trend change here. Now, IWM Russell, look at this day, guys. They were up over 3.2% today, pulling back a little bit to the end of the day. 2.72%. Can't complain, guys. Very beautiful day for the Russell here. So look at this, guys. Coming up, engulfing. We were saying that the Russell on Monday and Tuesday were not performing well. Now, Thursday and Friday, look at the action, guys. They kind of played catch up with the markets, engulfing this entire bearish move, now above the moving averages. You have not closed above these moving averages since our drops pretty much in August. Only a few days here, and then they took it back, right? So now the bulls are set up beautifully for the daily uptrend reversal here. We are now above our sweet spot of support that the bulls have been using in the past for pretty much the past year and a bit, right? Reacting beautifully from this zone. Once again, a lot of work still to be done on the weekly, but it's nice to see the bulls do it. So we will see, can they set the daily uptrend here and give themselves a better chance to start reclaiming more and more of this weekly? I'd like to see them get up to 180. And then even on the monthly, guys, they had to protect these lows, and they did, right? We flushed the lows a little bit, but now we're right back, you guys can see. So we're in this little nasty tightening range here, right? Very tough to get some technical analysis on this range. It's either going to go two ways, right? We were looking for a break of this area for the monthly confirmed downtrend, but now seems like the bulls want to save this, guys. In terms of this, we're going to need to set a monthly uptrend eventually here. But one thing's for sure, guys, holding nicely on the monthly support level. This was previous resistance at previous all-time highs. So doing a very good job on the Russell. Daily, bulls coming alive here. So one thing at a time, guys. Daily uptrend, need to set the daily uptrend, and then we will look to the higher time frames. But bulls setting up nicely here. And lastly, our Dow Jones names. Dow Jones names engulfing as well. Look at this. Boom. Last leg down. Boom. Engulfing all the way up to here, our previous resistance area. So looking fairly decent as well, guys, here, right? So going to be looking once again for the daily higher low and the daily trend change. On the weekly, looking very good as well. Engulfing 1, 2, 3 legs down. Boom. Engulfing move to the upside. So bulls are looking for the weekly trend change as well. Similar to all the rest of the indexes, reacting beautifully from our support zone down here. And on the monthly, guys, the monthly, this was a crucial area to hold, guys. I said it so many times on the channel. Look how crucial this area was, right? It's been support since pretty much last November. So almost a year's worth of support, right? Setting the monthly higher low. And now once again, setting the monthly higher low, going potentially for the monthly trend continuation here. Going to be targeting 35,500 for that. But we need to do one thing first. We need to change the daily trend first for that, and then recapture our weekly uptrend. And then you will be set for your monthly rally higher into these highs and try and continue this monthly uptrend that's been stuck for the better part of the last year. Beautiful performance by the Dow Jones and all of our other indexes. Now, guys, let's get into our major tech names. Yeah. So our major tech names. So Apple, starting off with Apple, very good performance on Apple, guys, recovering nicely from their little earnings, covering this little earnings gap that they had here. So very beautiful move by Apple here. Like I was saying, just looking for the daily higher low and daily continuation to the upside. Seems as though the bulls want to set that little bull flag here into our sweet spot zone. And now we are looking for the daily trend change here. So we'll see if the bulls can do it. Very nice recovery by Apple. You guys know that I love Apple in the 175 to 170 range. But if for some reason we pull back next week, looking for the daily trend changes on our indexes, right? If we pull back next week, I will once again be shopping for Apple in this sweet spot area. Very good area in my opinion. And Apple also looking for the weekly trend change, 3 legs down, and now looking for the weekly engulfing move here. So over the next 2 weeks, if we start recapturing 182, well, the bears will have lost the weekly downtrend, and then the bulls will have a chance to change the weekly uptrend, which will mean that our monthly lows on Apple are set. Look at the space created by the bulls, 3 months of downside, setting the monthly higher lows at my sweet spot, which was previous all-time resistance. Support and resistance on the monthlies, guys, is nasty, right? So look at this. set the higher lows, and now potentially set for another rise on Apple. I'm very bullish on this company at these price levels, especially here, guys. I think they're going to perform very, very well over the next 12, 24, 36, 5, 10 years, guys. Apple is a company that I can never say anything bad about, guys. They continue to deliver. So now it's just up to the bulls to change the daily trend to the upside here. And then we're going to be looking for 182 on the weekly to recapture that. Beautiful, beautiful, beautiful buying opportunity for Apple on the monthly longer time frames here. Now let's move down to AMD. AMD here, AMD absolute rocket ship, right? After earnings, boom, off the low here, guys, recapturing our weekly down trends, right? So look at this, 3 legs down, boom, 1 leg push up here, beautiful recapture here by the bulls here on AMD, closing at 4% on the day here, guys, right? And look at this move on the weekly. This is exactly what I wanted to see. Weekly downtrend, right? And I was saying, guys, 111 is key. What did we do? Broke 111, just like that. We are in a new weekly uptrend. Double bottom right here, boom. Bulls say, oh yeah, we're going for the weekly uptrend at this point. Weekly uptrend confirmed, guys. What does that mean? Your monthly lows are set for AMD. So any dip now is a heavy buying opportunity for myself in this context, guys. Any little pullback, going to be looking for the daily higher low for future rise on AMD. If we pull back here, I will be targeting the 106 all the way down to 102 area, obviously, once again. Right? And on the weekly as well, we are just looking for the weekly continuation of the weekly uptrend at this point. Wouldn't be surprised if Monday and Tuesday are red, and then we kind of pretty much end the week green as well next week on AMD. Very, very strong performance on earnings. And the monthly lows are set, guys, right? So very good job by AMD coming down for 5 months. We've been talking about it for a while. You had more than one opportunity to pick up this stock in my sweet spot zone. You can see the stock reacted beautifully from this area the entire time. We played AMD a lot over the past 2 months, generated a lot of premium on the company, and now it's time to ride some of the shares to the upside here, guys. So very, very nice monthly trend continuation here on AMD. Bulls in full control at this point. Now, Amazon. So Amazon performing very, very well again, right? So bullish engulfing move to the upside once again. Any pullback is going to be looking for a daily higher low for a daily trend change attempt, right? Support level down here, moving average confluence here. So if we do pull back in an area, guys, look for this area right here, right? 134, 133 is the area of potential pullback I'm looking for the breakout of this zone and potential retest. So daily bulls are in full control here. On the weekly, guys, looking very, very bullish as well, right? Weekly downtrend by the bears. And then boom, engulfing by the bulls. Weekly uptrend is not set yet. Weekly uptrend would need a lower, higher low, and then weekly push to the upside here. But very beautiful engulfing move by the bulls, if I do say so myself. Looking very, very healthy at this point. Amazon going to be targeting resistance areas of between 140 and 146, our previous 52-week highs here. Very, very healthy, guys. And on the monthly, look at this. Monthly higher lows set by Amazon bulls right at your moving averages, right at my sweet spot as well. Beautiful technical analysis here. Beautiful respect here by the technicals by Amazon, actually. So look at this, guys. Monthly uptrend continuation is potentially in motion. Crack 145, and your monthly uptrend simply continues. Amazon set to do very, very good things for the next 6 to 12 months. So it wouldn't surprise me, guys, if Amazon just continues to grind higher on the levels. Bulls now in full control of the monthly. They've always been in full control, regaining control of the weekly here, and now in full control of this daily trend as well. So beautiful performance by Amazon. Now let's move down to Google. Let me get some coffee here. My bad. So Google as well. Very nice performance by Google here, guys. I did sell my shares. We'll get into that towards the end of the video here. But very good performance on Google. I am expecting a potential pullback early next week, guys. That's the only reason I came out of Google. Google as well. We're looking for the daily higher low. This whole area, 12 EMA resistance. This whole area here, these 2 yellow lines, resistance, right? So getting to a point of resistance. Can they smash through it? Sure. But all points are leading to potential roll over here and then reconsolidate and potential for another push here. It's very possible that the bulls are slightly tired here after making such a nice rise off the bottom of earnings here. So we'll give them a shot at setting up for the daily trend change. Can they just blast through and set the daily trend change here by sitting on it? Yeah, absolutely, guys. But I'm just going for risk management at this point here in the trading account. So very nice move by Google. They still have a lot of work to do here, but slowly recapturing some of this weekly move to the downside here. You can see that we are recapturing the move to the downside on the weekly, right? Google obviously losing your weekly uptrend, but the bears not setting the weekly downtrend. Weekly downtrend would look something like this on the daily. And then on the weekly, it would look pretty much something like that. And if let's say next 2 weeks are red, then you get a weekly downtrend, not expecting that on Google. Look at the monthly, guys. Monthly on Google, you were just looking for your monthly higher lows, reacting nicely from your moving average right down here, guys. So looking for the monthly higher lows for Google to continue towards 52-week highs and all-time high resistance area. I'm very, very fond of this company. I think they had a great earnings report. It was just misinterpreted by the market. Bit of an oversell reaction here by the market. I do like this technical setup here. Bulls in full control of the monthly, trying to recapture control of the weekly here, doing a good job at that, and now trying for the daily as well. Google obviously it went from one of our lead bulls to now kind of trailing in terms of the work that it has to do, in terms of having lost the weekly like that, but it's okay, guys. I think Google is set up very, very well. If we do pull back into this area, guys, I will be picking up some shares and looking to ride them back all the way to the 140s here. So that's my play on Google. Now, Meta performing beautifully, guys, up 1.2% today, right? So Meta's rise continues here, engulfing move on the daily, right? So daily downtrend was confirmed. Now we have an engulfing move, still looking to set the daily higher low. So very possible Meta just does one of these sideways bull flags and then rallies towards the top here. So very good move here. On the weekly, you can see as well that they have recaptured the weekly trend as well, not allowing the bears to flush our lows here, right? So now we'll be looking to around 328, 330. If they can crush that, guys, your weekly uptrend will be back in motion here. And on the monthly, guys, Meta, this was a sideways bull flag. Meta, all these months of gains, didn't even give much of it back, right? Just consolidating near the top, some accumulation, potentially due for another rise here until the end of the year and early next year, as guidance for Meta was very, very, very solid. Amazing report by Meta here. So they did a great job here consolidating sideways, cooling off your weekly RSI. Now you can see we're not as overbought. So Meta Bulls doing a great job here in control of the monthly here. Higher lows are most likely set on Meta at this point, controlling the weekly very nicely, right? Not allowing the bears to get back too much, recapturing some of this weekly uptrend here. And now the Bulls looking for the daily higher low to recapture the daily uptrend. So beautiful job by Meta Bulls here. Microsoft is on an absolute tear, guys. So daily uptrend was confirmed here. They had a little bit of a tumble after earnings, right, due to the rest of the market here as well. But this was a buying opportunity in my opinion. And now the bulls have followed through. So daily uptrend is more than confirmed. Any single pullback here is just going to be for a daily higher low. Anything above 326 daily higher low for further continuation of the upside. Look at the weekly, guys. Weekly uptrend reversal complete by Microsoft. So bulls now in control of the daily. They've been in control of the daily for a while. Now back in control of the weekly, right? Weekly downtrend reversed by the bulls. So now weekly uptrend by the bulls. And look at this monthly, guys. Textbook monthly bull flag by Microsoft. Now looking to continue our monthly uptrend to the highs. So bulls in full control of our longer time frame monthly here, in full control of the weekly at this point, and full control of the daily. No red flags. Microsoft earnings were beautiful. They guided very, very well for the remainder of the year and through 2024. So it would not surprise me if this company is going to hit new all-time highs within the next few months here, guys. Monthly chart is absolutely primed for it, and the weekly chart is looking very, very good as well. So great job by Microsoft bulls here. Any dips down to this lower area, guys, are definitely going to be buying opportunities for longer-term investors. Now let's move down to NVIDIA here. NVIDIA, great job by NVIDIA here, guys, right? So recovering very beautifully, guys. They almost lost it. We've been saying this all week on the channel, but now bulls engulfing. This is exactly what we wanted to see, guys. Engulf the 437, and they did just that, engulfing it towards the upside. The bears have now lost the daily downtrend, engulfing by the bulls, and now the bulls are looking to set the daily higher lows for daily uptrend resumption here, sorry. And now on the weekly, potential weekly downtrend, almost canceled now by the bulls. So great job by NVIDIA bulls of recapturing a lot of that move to the downside. The bulls still have step number 2 to do, right? So they still need to set the daily uptrend. As soon as this move tops out, look for a slight little move down here. I would be targeting your 437, which is also your moving average, right? Previous resistance, now going to be support, and your moving averages, which are now above, should act as support as well. So look towards the 430 area, 437 for that potential rise, right? So the breakout and retest of this area before resuming higher. And NVIDIA performing beautifully on the weekly as well, saving that potential weekly downtrend back to the bulls, protecting the 404 and 400 level with their lives. And now NVIDIA also potentially just a monthly bull flag for monthly resumption to the upside here. So you can see, guys, no red flags on this monthly chart whatsoever. We were just looking for a monthly higher low. I was expecting it maybe to come down a bit lower there, but they've done a great job here, cooling off the monthly time frame with this pullback, aggressive pullback, cooling off the weekly time frames with this range at the top here, right? So now we're looking good. Bulls potentially primed. So bulls full control of the monthly, bulls now starting to get back in control of the weekly, and now bulls also consolidating their control on the daily. So great job by NVIDIA. Now our 3 last ones, guys, Tesla. And now Tesla, guys, looking into Tesla here. So Tesla also with a nice little gain here today, went all the way up to 227 and now pulling back a little bit towards the end of the day. So it was a daily downtrend. I'll remind you, now we're looking for the bulls to reset the daily uptrend to the upside. If we do get some pullback in the next week, potentially lower to the 210 area, I will definitely be looking for some puts, short puts, right? So I'll be looking to buy the stock in the lower 200 to 195 range. We will check the premium on those. So bulls looking to reset the daily uptrend to the upside and potentially set our weekly bottom here for a potential weekly leg up. So the bulls are not in control of the weekly, right? So the bears still have the weekly downtrend. We're just going to look for the bulls to put in enough of a move to potentially reverse this into the end of the year and into Q1 of next year, guys. So very good job by the bulls here on the daily, looking for the daily recapture here of the daily uptrend, looking for that reversal. On the weekly, just looking for the weekly to come all the way up to about 236, 240. Get me up there and you set yourself up nicely for a potential weekly uptrend reversal. And on the monthly, guys, we've always been looking for your monthly high or low, right? Monthly high or low is potentially set after that earnings disaster. If markets keep pushing higher, I don't think that Tesla will just keep selling off here. Looking for the monthly high or low, very possible that we did just get it here around the 194 mark. So monthly, bulls are still in full control of the monthly here, guys, right? So all we need to do is recapture the daily uptrend and then eventually the weekly uptrend, but your bulls are in control of your longer term monthly time frame. Tesla, still love Tesla as a company for the long term here. Now, Palantir absolutely exploding after earnings here, guys. You can see that they are up after earnings now in 2 days, 26%, almost near our 52-week previous highs, right? So bulls are in full control of this daily chart at this point. Any single pullback is just going to be for a daily high or low for daily trend change by the bulls here, right? So now we're above this whole $18 area of resistance. If we do pull back, target this area. They could very well just come back, sit on this area as support, and then use it to launch to the upside here, guys. Weekly is absolutely beautiful on Palantir as well. You can see this very nice recapture of the weekly uptrend. So bears tried to set the weekly downtrend, couldn't flush this 1360 area, and now the bulls have just recaptured. Weekly uptrend confirmed, and your monthly is looking very, very bullish. Monthly bull flag on Palantir now, and now challenging. If we crack these $20 highs, you will now be in a monthly confirmed uptrend here, guys. We have not got a monthly confirmed uptrend ever on Palantir since pretty much the IPO, right? So the bulls have just been rising, set the monthly high or low. This could be your first monthly confirmed uptrend. So bulls in full control of the monthly, full control of the weekly now as well. And now daily, full control as well. So Palantir, nothing but good things to say about this company. Just a little bit high for me to be adding shares at this price level personally, but I'm a very firm believer in Palantir for the long term. Now, PayPal as well. PayPal also coming up, also nice 2% gain here. PayPal finally with an engulfing move by the bulls. Love to see it here, guys. Very, very good job by PayPal here. So coming up all the way to $56, and now engulfing move is set. So now we just need to set the daily high or low. Get me a daily trend change. Have not had a daily uptrend since the month of August, so I will be looking out for this. Great little pop off of earnings. Nice little volume pop as well, so institutions may just be finally buying PayPal's recovery story. Above our moving averages, we haven't been above the moving averages since September, so very, very good, creating a lot of space for your daily high or low. On the weekly, we are obviously looking for a weekly trend reversal here, so the bulls need to put in as much as a move with this daily uptrend potential here, right? Need to put in as much of a move against previous 65 levels to really create the space for a weekly uptrend. Have not had a weekly uptrend since all the way back here in May and June here. And obviously on the monthly, guys, you know that PayPal is absolutely crushed. So bears still in control of the longer time frames, monthly and weekly, but now it is where we can potentially start to reverse that with a new daily uptrend. All right, first things first, we need to do a lot of things on PayPal to reverse, but I love this area for PayPal. Very, very cheap in my opinion. It's going to take some time, guys. These longer time frames are going to take some time to reverse, but I do think that PayPal can do it. So great job by the bulls. Now give me that daily trend change and start marching into the $60 range. That's pretty much it for our technical analysis, guys. Now let's get into our portfolio here. So portfolio, very good recovery by the portfolio. You can see, guys, that we're back to pretty much 32% year-to-date performance here. Great performance. Everything that I got assigned at perfect levels. And then the stocks rose and we covered calls on them and we pocketed some juicy premium. So strategy playing off very, very beautifully once again. Back to 32% year-to-date performance here. You can see we're outperforming the SPY only about 12.5%. And against the NASDAQ, we are back above the NASDAQ as well. So you can see NASDAQ currently sitting about 28% after today, and we're at 32. So very, very good performance there. And in terms of the positions, guys, you can see that there's a few new positions that I wrote yesterday and a few old positions. So Fortinet made a little earnings play on Fortinet. You can see the 47.5s. Well, 47.5s are now worthless. So I did make a cheeky earnings play when it was in the 57s before. And pretty much I was looking to buy this stock. I would have loved to have been assigned, guys. I will be playing Fortinet pretty much next week as well, around the same levels if we do get a little dip here, recovering nicely. So that position is worthless. Pocketed pretty much 20 cents per contract, 2 contracts there. Rivian, our second play, you guys know that I got assigned 200 shares of Rivian here, so we'll move myself over. 200 shares of Rivian at $18.50. Our average cost on Rivian, let me pull it up for you guys, right? We had the covered calls for this week, worthless because we didn't close above 18.5. Now, earnings next week, covered calls 74 cents, right? So about $150 for 2 contracts there. I had to take it, guys. Rivian, I do love this company, and we're at a decent little price level as well. You'll see all the premium that I wrote on Rivian so far. My break even is now $17.35 with the contracts that I wrote for next week. So Rivian above that right now. We will see how they do for earnings next week on Tuesday, but looking good. Still assign my 200 shares. Apple 175s. I let myself get called away on these. You will see why. Apple, I'm expecting a little pullback in the markets next week just to set the daily higher lows. So if we do pull back on Apple, I'm just going to be looking to get pretty much maybe the 172s or maybe even the 175s, but at a better price, guys. So you can see my average cost after getting a sign on Apple at 175. These shares are right down here, right? 174.30. After writing all this premium of covered calls, our average cost was down to $172. So selling them at 175 today, nice little $300 gain on Apple pretty much in 2.5 weeks. So very, very good returns. Oh, it's over 2.5% in about 2 weeks. That's what I'm looking for here, guys. 0.5% to 1% a week. Very, very good performance on Apple. So Apple will disappear from the portfolio, but looking for them next week. AMD, you guys can see that I did roll my calls. Once again, you'll see it on the trade here. We bought back the calls here pretty much for the 102s that we had earlier in the week. So we bought them back for about $5.95 and wrote them for next week for $6.65. So $6.65 minus $5.95, that is a 70-cent premium roll on top of the existing premium that I already had. So AMD, look at this premium that we've generated on AMD so far. Very, very good. We got assigned at 102, 100 shares, and now our average cost is all the way down to $96.75. Very, very juicy returns on AMD here, if I do say so myself. I'm leaving them open for next week just because of how much room we have to potentially come back on AMD. Very, very good spacing here next to my strike. So if we do come down here next week on AMD for a little bit of a pullback, I will close these covered calls at a profit, potentially coming back down here and maybe looking to even add some AMD shares. So very, very good performance on there. Elf Beauty was a play that I made yesterday after earnings pretty much. So Elf was looking to just make a cheeky play when they came down here to $98. I was looking for the 93 puts in this area. We ended above that 96.15. So you'll see we captured all that profit today, $32 here. And that's pretty much it. My Google shares, we got assigned at $130. We captured about 63 cents on the premium for being assigned on Google last week. We got assigned at $130. So my average cost was about 30-ish right down here. And today when I saw the shares over 130, we're coming into a resistance area, moving averages as well. The indexes are slightly overbought too. So if we do get a little pullback for the daily higher low, I'm just looking to get Google at a lower price, guys. That's all I'm looking to do, is do a little bit of risk management for Apple and Google here. And then we will get some Google shares a bit lower. Hopefully, if it just continues rallying to the upside, so be it. But I did take my roughly $100 on Google since last week. So that's almost 1% in a week. It's exactly what I'm looking for here, guys. Didn't even write covered calls, literally just sold the shares as is. And Airbnb, I also took a play yesterday, the 110s. You'll see that right here. Sold the 110s for 70 cents here, and we closed them earlier today for 11 cents. So captured 60 cents, guys. That's 0.5% in a single day. So very, very nice trade by myself, if I do say so myself. So Airbnb obviously ending here when they came down to about 115. That's when I wrote the 110s for today. It was a one-day trade, and then obviously closing around 122. I love Airbnb in this level. However, anything around 110, 105 is a very sweet spot for me for Airbnb. So that's pretty much all the trades that we made this week here. You can see that a lot of them are disappearing, right? Apple's gone, Google's down. So next week, we're coming into next week with almost full buying power. Still just have a few assigned positions, right? AMD is fully covered. Apple's going away. UPS, nice little recovery on UPS here, still away from our average cost. I'll remind you, my UPS average cost is pretty much at this point $147-ish, right? So $147.50. We're almost there, just not good enough yet to write some covered calls on, but I will be looking to ride this stock back up into the $150 range. PayPal, still holding my PayPal, obviously. Rivian, we went over that earlier, so still holding my 200 shares. TMF, the TLT 20-year bond play, still coming up nicely now. CSIQ coming off nicely off the $19 lows here, back up to 21.60. My average cost is about 28.30, so not there yet to write covered calls. And my banking ETF had a low of about $16 this week, and now we're back up to 17.68, so we're doing fairly good, guys. So great recovery week on the portfolio here, and coming into next week with a lot of buying power, so we'll be looking to buy these potential higher lows that I've been talking about if the bulls take a little bit of the breather, guys. I'm going to be looking to deploy that buying power and get the same positions, guys, just at lower strikes for better value. So a little bit of risk management. So I hope you guys enjoyed today's video. A bit of a long one. We did a lot. Portfolio recap, monthly recaps, a lot of earnings as well. So I hope you guys liked it. If you did, consider liking the video and consider subscribing to the channel. If you're new, guys, love to have you here. Over 430 subscribers, guys. I love you guys for clicking that. I love doing these videos for you guys as well here. And as always, if you have any questions whatsoever, leave them down below in the comments and I'll answer you within the next 24 hours. So take care, guys, and peace.